So in the last few videos that we've had, we talked about all these legislative changes that have come into effect. And I had a recent podcast where I was showing you what a closing argument might look like for past medical bills. Well, this segment, we're going to look at future medical expenses and how they're impacted in, let's say, a trial, for example. And we're going to talk about a little bit about what future medical expenses are as they're interpreted under the law. So an award of future medical expenses is what was recently addressed by the legislature. And the question that goes to a jury when you try these cases after the third day, they're going to ask, what is the cost of all accident-related medical expenses that the injured party is reasonably certain to incur in the future? Again, just talking about future medical bills. That's the question the jury has to answer. And they look at all the evidence, well, they're implored to look upon all the evidence and make a determination in a monetary amount and say, well, this is the amount. The legislature has changed what we can show as evidence in these cases. So it's a challenge for plaintiffs' lawyers now to see what we're going to do when we try to prove up future medical expenses. So the Florida statute 768.0427 subsection C is the statute that now addresses this issue. And it deals with any future medical treatment and any future medical services a claimant, such as a plaintiff, a person bringing a lawsuit, is reasonably certain to incur in the future. That's the standard. That's the case law. This is what the statute deals with. So it's telling us what kind of evidence we can bring in. So subsection C starts out by saying evidence offered to prove the amount of damages for any future medical treatment or services the claimant will receive shall include, but is not limited to, evidence as provided in this paragraph. So lo and behold, these are what they're telling us. This is number one. If the claimant has health care coverage, so the first category of claimants are the people that have health care coverage. And how do we know that? We ask the client, and we see how the client was paying their bills. So if they have an existing health care plan other than Medicare or Medicaid, they're excluding those, just a regular private health care plan, or if the claimant is eligible for health insurance. So that expands the category. It's not just for people that have health insurance, it's for people that also could be eligible, except Medicare or Medicaid recipients. This is how you get this evidence in now with the new bill. Evidence of the amount for which the future charges of healthcare providers could be satisfied if submitted to such healthcare coverage, plus the claimant's share of medical expenses under the insurance contract or regulation. So what that means is if we're going to present evidence in this case, we're going to have to show for, again, these are for things that haven't happened yet. It's things that they're reasonably certain to incur. We're going to have to show what healthcare providers would pay for future charges. So if you had a procedure like a surgery, we would have to figure out what health insurance would pay for that particular procedure. Let's say you get a procedure 30 years down the road and it's related to an injury you sustained. Let's go a little short. Let's go 3 years down the road. What is the healthcare provider going to pay? A lot of that's going to be speculative, as you probably can imagine. So it's not before. What we would have is a medical doctor who saw the patient and would get up there and testify. This is what I believe the patient is reasonably certain to incur. Now they're saying, well, wait a minute. If you have healthcare coverage, though, or if you're eligible for healthcare, not Medicare or Medicaid, you're not going to necessarily have to be able to do that alone. You're going to have to present what healthcare or what health insurance would pay in the future. A lot of speculation is involved with that. And they're also putting at the bottom the claimant's share of medical expenses under the insurance contract or regulation would also be considered. What does that mean? The premiums you're paying for health insurance. So that's the first part. That makes it, to me, a lot more speculative, because if you're going to get a surgery 3, 4, 5 years down the road, you're going to have to guess at what the cost would be. And you're going to have to guess, more importantly, based on this statute, what the health insurance is going to pay. It goes on to number 2. If the claimant does not have health care coverage, this is another classification of claimants, or has health care coverage through Medicare or Medicaid, so these are for people that have Medicare or Medicaid, or is eligible for Medicare or Medicaid, this is what is going to come in. This is what you're going to be awarded. This is the evidence. Evidence of 120% of the Medicare reimbursement rate in effect at the time of trial. At the time of trial, for the medical treatment or services the claimant will receive. Notice it means at the time of trial. It doesn't take into account things like inflation, and we'll talk about economists and how they're valuable nowadays even more than ever in another segment. But basically what they're saying is if you have Medicare, okay, at the time of trial, and you're going to get that same procedure in 3 years, that surgery, we're going to reimburse you 120% of Medicare. We might say, well, man, that's great, right? 120% of Medicare. What you're going to find out, Medicare doesn't pay a whole lot. Okay, if a health insurance facility, a healthcare facility or a hospital bills Medicare, okay, Medicare is going to pay a small fraction of that. So you're getting, the legislature's giving you 120% of that. Sounds like a lot, probably isn't. If there is no applicable Medicare rate for a service, like you're getting a service that Medicare just doesn't cover, they're going to give you 170% of the applicable state Medicaid rate. Medicaid is a little different from Medicare. Medicare is for people that are 65 and over. Medicaid is for people that are on the low income scale and they qualify for Medicaid. So they're going to give you a Medicaid rate. Again, those are low rates. Check it out. And I'll talk to you about it if you want to talk. Here's where a good trial lawyer can win. Because to me, here's where it doesn't change. Okay, this doesn't change anything that we had before. Because remember, I told you, what did we do before? We brought the treating doctor, and he would say, this is what the injured party, based on my experience as a doctor, based on what I saw, based on physical examination, based on a review of the records, based on a review of the film study, this is what I think as a doctor this person reasonably certain is going to incur. And it doesn't mean I have to be 100% right. It just means I have to be more probably than not right, okay, within a reasonable degree of medical certainty. Any evidence of reasonable future amounts to be billed to the claimant for medically necessary treatment or medically necessary services can be used as evidence. So as a trial lawyer, to me, that's the same thing. Okay, that's part of the evidence that the legislature is allowing us to put into evidence. And yeah, there's going to be, different ways that we can do this. The defense is probably going to put in those insurance rates. Why? Because they're lower. But a good trial lawyer will tell you that if you put that doctor on the stand and you supplant him or her with other experts that can talk about the impacts of how the cost of Medicare or the cost of health insurance is going to be later on, you can get past this and you can win your case. Okay, so if you want to talk about any of this, this is an important area of law that's changing. A lot of people are concerned about it, but if you get an experienced trial lawyer, they should be able to handle it and get you the maximum value for your case.